So this is me. I am Matthew, and we are just going to discuss on investment analysis and FCMB Group Plc. Recently, they've just said that they are offering 160 billion naira public offer of 16 billion shares at on 10 naira each, and it's open up till November ending. November 6th. So the essence of the shares is just to help them meet up the regulatory minimum capital required for international banks. So the investment we're talking about is on FCMB Group and is a diversified services holding company headquartered in Lagos, Nigeria. And then it's been going through some major capital raises to meet up the CBN regulatory capital benchmark. So in early 2025, it completed a public offer of 147 billion through the issuance of 19.8 billion shares at 7 naira 30 kobo. And it was, we realized that the offer was 33% oversubscribed, with about 42,800 investors participating. Um, so why did I do this analysis? So a friend reached out to me and said, Matthew, I'm interested in this FCMB Group PLC public offer, but I'm worried and he trusts my judgment when it comes to investment analysis. And he said, can I go ahead to invest? And I took it upon myself and I said, I would definitely have a look at those investments that you're considering. I'll have a look at it and then see what I would. And I just wanted to like, okay, I'll have a look at those investments and then tell you one or two things. But then I don't give investment advice. I don't tell you if you should invest or not. My company doesn't do that. Um, we are not investment brokers, so we don't do that. So next thing we did was we carried the tax. The first thing we look at the period we're going to look at last 10 years performance of FCMB from 2016 to 2025, and then we considered basic investment ratios, and then we also consider external factors as well as internal factors for the period under review, and and then like I said, 160 billion naira public offer, 16 billion shares, 10 naira each. And deadline is November 6th, 2025. And then we're talking about FCB Group. So it's worldwide. So as much as you could buy from any part of the world, um, you could invest in it as a Nigerian, even in diaspora as well. And what we considered was just basically quite a couple of. So we considered the dividend per share and the share price. So you can see that dividend per share has been steady over a period of time, 2016 to 2018, and then it had a rise again, steady again, that's a rise again, and it kept on rising. And then the rise was said to be less steep when it comes to between 2024 and 2025. I will look at the share price. And so, what's the share price? Is the price of the share in the market in the stock exchange market. So, and what's the dividend per share? Dividend per share is how much dividend, how much you as an investor you receive for each share you own in that company. So look at the share price over time. Yes, it has increased. It's a good one. Not bad. It does make sense. Yeah, it does. But then we look at dividend yield. That's what the problem is. The dividend yield doesn't look that nice. So what it means is that if you see it's from 9% in 2016, it fell down to 2018, fell down to about 5.5% or so, and then it rose again to 2019, and then it fell in 2020, 2021. It was still struggling until now. it's still not able to meet up with the peak that he had in 2016 and 2019. So we could say probably the pandemic contributed, but then we expect a very meaningful recovery in the last 2 3 years, which yes we are seeing, but then it's not convincing enough. Seriously, it's not. The dividend yield isn't convincing. So what is dividend yield? You might be wondering. So dividend yield is your how much dividend is being paid to you as an investor over the worth of your share. So if you're being paid 10 naira and then your share was 100 naira, your dividend yield is just 10%. Do you understand? So it is the dividend over the share price multiplied by 100 that gives us our dividend yield. So looking at it, it's saying we're just saying for each of these shares, the dividend yield is dropping. So when the dividend yield drops, there are two things that is involved. Is either the dividend itself is dropping or then the share price is increasing and the dividend is constant. So in this case of FCMB, the dividend is being constant, fairly constant, but then the share price is increasing. So because the share price is increasing and the dividend is not increasing as such in the same rate with the share price, that is why the dividend yield is dropping. And it's also advantageous because somehow we can look at the bright side of it, because if the share price if is increasing and then the dividend yield is only the dividend is just being static or just there in the case of FCMB fairly static, it's a good thing because then you can decide to sell off your shares, and then you still make some profit. But then how much you earning per month if you're deciding to hold that share for a long time, what it means is that you might not really be getting enough money, enough dividend coming in, or as an income dividend income coming in part time. But when you sell at that point, because the share price is rising, it's good, you tend to make profit. Now let's look at the share price growth. The share price growth, we're only saying, oh, how much the share price has grown from this trend from the last 10 years. So looking at it, you will just realize that the share price growth just doesn't really look right to us, because in 2017 it had a very good share price growth, and then it dropped in 2018. It further dropped in 2019. We might want to attribute this dip in 2019 to the pandemic, but then we expect it to rise, which it did in 2020. But why did it drop again in 2021? Is it the same pandemic? What's the reason behind it? And then it started rising again. It got its peak in 2023, beautiful, but then it dropped again in 2024 and 2025. So we might want to question, why does the share price just why is it not just growing constantly? Why is it having a dip? Why is it coming down? So it means that you holding on this share for a long period of time, if you are not going to hold it for 5, 10, 15 years, if you're in a rush to sell it, you might just be selling at a loss, because it's very possible the share price is still going down. Looking at the graph, the share price growth might fall again in 2026 or 2027, because that's what the growth is telling, especially the fact that the business has done two public offers for this year. It's thought there's a very high possibility that the share price will still drop further. Um, Early this year, the share price was oversubscribed, so there's a possibility it's still going to drop further. So you need to sit back and think: is it am I buying this to sell immediately, or am I buying it to keep? You understand? Now, what we observed over the last 9 years, FCM dividend yield has fallen from around 9% in 2016 to steady 4% to 6% in recent years. It's not a bad sign, like what I've explained, that the share price has been rising. And yeah, so there was a quick recovery afterwards, which shows FCMB has maintained a consistent payout and is managing profit sensibly. So we're looking at 6% dividend yield on the average for the last couple of years, for the last 10 years. Share price, yes, has increased. The dividend paid has not reduced. So it's just kind of a fairly constant. It just don't really make that much sense, considering the fact that considering the fact that the share price is increasing faster than the dividend itself. So, looking at the share price chart, it tells a different story. That the strongest is 2020, 2023, which which we've talked about before. But then there was a short period of decline as well. So this up and down pattern, which is what we saw here, the up and down pattern, suggests investors are reacting to the short-term economic pressures, like the changes in Nigerian FM exchange rate, inflation, and government policies. So if you check this period, you tend to realize that the exchange rate in 2024 was very crazy in Nigeria. So there was so much devaluation of naira. There's so much inflation, and this has really affected even up to this year. Although the country keeps claiming that they are doing economic reforms and they're changing the country, but then we are not seeing the effect on the economy really. We're not seeing the effect of subsidy. We're not seeing anything. So the country is still going into more debts and increasing debt. Even currently, the World Bank says that 139 million Nigerians are poor, and then the federal government is saying, "Oh no, we're not poor. You're not using the right statistics." And we keep on wondering, would World Bank statistics be wrong? But Nigeria said so. The federal government of Nigeria said World Bank was wrong. Okay. And remember, one of the top leaders in World Bank is Ngozi Okonjo-Iweala. She is a Nigerian. So I'll leave it to you to think about that. So my recommendation, let's look. We're looking at why do you want to buy these FCMB shares? That is the major question when you invest in. Do you want to hold it or do you want to sell it? You must really be truthful to yourself, because when you're holding, you view investment in a different way. But when you're buying to sell, you also need to also view in a different way. So we cannot give you advice or tell you what to do if we don't know why. So that why is a big question that needs to be answered. So what I said here was FCMB looks like a steady income stock with growth potential, but not without risk. With the approximate 6% average dividend yield provides good annual returns with a chance of price gains, adds long-term value. So if you're keeping it for long, it sounds reasonable. But then if you just buy and want to sell immediately, remember that that share price growth, it's probably still going to fall down. So you need to really consider this. And now, for more cautious investors, FCMB works best as a part of a mixed portfolio, not the main holding, until it proves it can keep profits growing more consistently. So that's what we call diversification of risk. So that's what I'm talking about. That if you're going thinking of investing in FCMB, then you shouldn't consider it as one of your main portfolio. You should just consider it as part of a mixed portfolio. You need to diversify your risk, so that in case FCMB go to the deep in the next 1 or 2 years, you won't lose most of the investment, and also you probably just hold on and wait for it to rise again. So sorry to break your heart. My complaint is Strategy Finance and Advisory do not give investment advice. So we only analyze, and we do not recommend whether you should buy the shares or not. So right now, it's up to you to decide. I'm not going to tell you to buy or not. So it's up to you. So thank you very much for this short presentation. Thank you for listening. You can visit our website, WWE Strategic Finance Limited. We do bookkeeping services, payroll, management accounting, budgeting, forecasting. We help young businesses grow. We also do training, education. We do finance work experience. If you want work experience and you want to transition into the UK career world, we are the best people you can come across. We could help you references. We should train you on the job, train you to become an accountant as well, and guide you and mentor you all through your education and career transition. Um, and then we also have services for charity, the churches, mosque, and the likes, and also self-assessment. We help you to file your taxes. We advise you. We help you as much as we can to uh, um, 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 prevent you from getting into the clause of the HMRC. So you can always bank on us at any time. You can give us a call, send us an email. We're available to help you. Thank you very much. My name remains Matthew. I'm a licensed accountant. I'm a business advisor, and I'm here to see you grow. Thank you. Bye bye.